Thanks for joining me on my market report. My name is Mike, and if you guys are new to the my videos or my channel, these videos are on mortgage rates. We get into what's impacting mortgage rates on a daily basis, whether it might be something from the economic data or something from a headline that came out or something geopolitical. Or sometimes the sentiment just changes in the market, where sometimes we see that good news you would think would be good for the market is actually bad news, and vice versa. And we're here to kind of explain that to you and get that information out to you. If you're watching these videos, you're probably either somebody in the real estate spectrum, so maybe hopefully these videos will help give you some information as to what's going on with the markets. So when you're talking to your clients, this will be helpful. If you guys are consumers, maybe you guys are looking to refinance or buy, hopefully this will give you an idea of where the trend for interest rates are, and whether if you want to maybe lock in or if you want to kind of hold off a little bit. This will hopefully give you some information to help you give you a better decision with the process. A little bit about myself is I am a loan officer. I do work with a national lender, so we can help you guys in all 50 states. We're here to answer any questions you might have, whether if it's about mortgage rates itself or if you got stuff other than mortgage rates, like mortgage programs that might be available out there, or different things about the process, or different, etc. I mean, please feel free to reach out. We're here to help you guys out. We certainly would love to earn your business. So again, please reach out. Give us send us through the social media. It's probably the best way to reach us until we can get to know you, and then we'll give you more better contact information. But for the meantime, why don't we jump right into this video and get to see what's affecting mortgage rates today. Today is the second day for jobs data that we're going to get. Tomorrow will be the big day for from the BLS, or Bureau of Labor Statistics. So we'll get the non-farm payrolls as well as the unemployment rates. However, today we get the weekly jobless claims, which is right here. So last week we had 199,000 people apply for unemployment. That was revised slightly lower to 194,000. However, for this week they're increasing it to 240,000 for forecast, but it did increase, but not as much as the forecast at 222,000. Now, Challenger layoffs, that had a pretty big drop right there. That went from 22.8 approximately million announced layoffs to down to 14.8. Well, 14.9 will round up a little bit here. 14.9. So that's a pretty big drop in terms of potential job layoffs right there. Continued claims, we see a big drop off, so we're down less than 2 million now at 1.956 right now. So those are all good news right there. Now, headline news is we're getting some. Investors are watching the whole Omicron, and now, of course, yesterday it was announced that in California here was the first case that was verified that we from the Omicron. So it's here in the U.S. now. How much widespread it is, we don't know yet, but they found at least one case yesterday here in California. So, of course, that was kind of spooking the markets, and it's not so much the virus itself, it's what the government and everybody else might do in terms of how it's going to affect the overall economy. Are they going to do more lockdowns and stuff? So those are what investors are more concerned about. We do have a few federal Fed members speaking today. The whole topic is, it sounds like there's going to be a pretty big policy change. So with all this going on with the new virus coming out, now you got them potentially changing their policy in the December meeting coming up. And what that means is that they're talking about going ahead and speeding up the tapering process, so that way they finish the tapering in a quicker fashion, and then they can proceed to start raising rates sooner as well. Because right now they are concerned about inflation, and they did basically state that we can remove the word transitory away from any more comments about inflation. So they are basically set to try to stave off inflation by raising rates coming up sooner. So we may see that sooner than we expected. They were looking at that probably right around July, September. Now that could potentially move up sooner as they wind up the tapering process sooner than anticipated, or at least what was previously announced on there. So today the markets are trying to settle around. The stock market is rebounding a little bit. It's coming back after several days of losses. It's kind of by the old adage where you buy on the dips. So you got people coming in buying on the dips. So money is kind of leaving the mortgage side of things. Mortgage-backed securities are kind of like a flight to safety. So money will go from one to the other. So money is kind of leaving now from mortgage-backed securities and bonds over more to the stock equities. And as a result, we were up earlier in the day, as you can see, and now we've been dropping further down. So right now we're down about 33 basis points, which translates to worse pricing today. So our pricing won't be as good as what we saw yesterday. Yesterday's close, that is. Yesterday we had some improvement in our pricing. As you see here, we did get back up to the 25-day moving average. Now we're close to where basically we started the day yesterday, that pricing. Yields have shot back up to about 1.46 after being down about 1.41. So again, it's kind of working its way to negative territory as well. Let's touch base on what the national average for rates are for this around the U.S. and this is on the conforming level. And they do have they do have points built into them. So 30-year fix looks like at 3.18, and then the 15-year is looking at 2.55. So that's come down a little bit. It was at 2.62, I think, yesterday. Again, these are kind of national averages. There's a lot of variables that go into pricing of mortgage rates. So one rate does not fit all. What I mean by that is you could be talking to your neighbor, you could be talking to friends or family. Everybody's going to probably have a slightly different rate, primarily because different loan programs have different rates. We got variables that, and they're all together. You can't just say just one over the other. It's basically they look at overall. All these variables are looked at together, and that is your credit scores, your down payment slash equity. So down payment for purchase, equity for refinances, and a property type. If it's a single family versus a condo, townhouse to multi-unit property, if it's a owner-occupied versus second home or investment properties. All these things are, again, different variables that go into it and can alter pricing. And of course, the pricing for that day makes a difference too, because rates don't always stay still. They do change even throughout the day versus even on a daily basis. That's why you're watching these videos, to see where rates are going. All right, folks, that's pretty much the wrap for the day. If you guys like these videos, we greatly appreciate if you guys could smash that like button and follow us. We certainly appreciate you guys. Thank you so much for watching. And if you guys got any questions, please feel free to reach out. We're here to help you guys. Have a great rest of your day. We'll look forward to see you guys tomorrow. Bye-bye.